For all of you in the stock market, I can't give you stock market advice. I no longer have the kind of money that I could in the past to throw into the stock market. So I have zero in the stock market for any practical purposes, no stocks whatsoever. But let me tell you something, guys. If you have stocks in the market, please do your homework, because the market is in a perilous state right now that nobody's talking about, and people are losing their jobs, etc., etc., etc. So I want you to listen to this, and then we'll take it on the other side.
A growing number of economists are warning that the U.S. stock market may be following in the footsteps of past market crashes. Despite rising stock prices, economists say today's AI bubble and other factors are fueling similar fears that led up to past economic downturns. Steve, your first chart takes a look at how the rising stock prices we are seeing today compared to past markets right before a major financial crash. Tell us about it.
The first of them, as you said, is the rising stock prices. If you look over here, you can see that in the last 6 months through October 8th, the stock market had its best 6 months since 2000 for any 6-month period, rising 36%. And that's part of why people are talking about this. Now, why is the stock market going up? It could be a bubble. We're going to talk about a couple of other things, but there's also a fair degree of optimism around AI and the fact that corporate profits have been quite strong as companies are using AI to cut costs and things like that. So there are people who believe fundamentally the stock market is on sound footing. But if you look at the stock market compared to other peak markets, it does look pretty scary. So this is what we call the price earnings ratio. It's how we measure how expensive stock prices are, the ratio between the stock price and how much the company is actually earning. And you can see here that at present, we're at 39, which is well above the 50-year average right over here of around 23. And so I've shown you 3 other similarly expensive stock markets. The global financial crisis at 28. Now, that was not as much a stock market crisis initially as a banking crisis, so a little bit lower. The famous dot-com bubble, the last time we were in a situation like this, of course, it was the internet we were talking about. The analogy to 1929, when it was only at 33, actually a bit less expensive. There's certain other adjustments. 1929 was a long time ago, but the market was expensive. What happened after those high prices? The stock markets all dropped pretty precipitously. 56% after the 2008 financial crisis, 49% after the dot-com bubble, and a stunning 85% after 1929's crash.
Steve, one of the other warning signs you're looking at of a potential bubble is retail trading. Can you explain what that means exactly?
Yeah, sure. And this also bears relationships to 1929. What it means is the stock market is normally dominated by institutions, sophisticated institutions doing fundamental analysis. At times in the past, and perhaps at present, you have retail investors coming in, individuals who are out there sort of playing the stock market game, if you will. And so I'll show you a couple of examples of how that's happening. This is the overall S&P here going up as we talked about. But here's a Goldman Sachs basket of retail stocks. They found a bunch of stocks that these individuals are focused on. Companies from Palantir, which is a defense company, Micron, which makes semiconductors, and Hers, which is an online pharmacy, Warner Brothers Discovery, and they calculated how those prices have done. And you can see they've way outpaced the general market because they've become what we call meme stocks, individuals piling in. Another measure of this are options. Options are when you take an option on a stock. If the stock goes up, you can make a good bit of money, but if the stock doesn't go up or if it goes down, you can lose all your money. So it's a kind of a leveraged, highly risky bet on stocks. These are retail. Again, these are individuals, not institutions, and what they're doing. And you can see that retail options volume has taken off. There are over 100 million options traded the other day, only the second time in history when over 100 million options were traded by retail investors.
The third chart looks at this sort of rush to gold.
Yeah, so stocks may not be the only bubble that's out there. You've got a few other things happening that are really pretty amazing. One is gold and silver. I'm showing you gold gold here has hit a record price of about $4,500 an ounce. It's come down a little bit the last few days, but it's still way up here. Why is this amazing other than this? Because gold usually tracks interest rates. The higher the interest rates, the lower the price of gold because it's more expensive to hold. This red line is interest rates. It's inverted. So down is higher actually, just to make this clearer. And you can see how closely they were tracking. Now they've become disconnected. Why have they become disconnected? A lot of reasons. After the Ukrainian invasion, when the world froze Russian assets, a lot of central banks said, we better hold gold because other stuff could get frozen. But the other reason is uncertainty. Gold prices also track uncertainty pretty well. And so right now we got a lot of uncertainty for all the reasons we well know. And so we have high gold prices. And it's not just even gold and silver. Bitcoin is up 60% over the past year. Another speculative bet that a lot of people are making. So there's a lot of speculation in the market. There's also some fundamentally good things like AI happening. Where that goes, anybody can bet their own money on.
Exactly right. So folks, if you are into the stock market right now, it is time for you to be careful because let me tell you some of the reasons why it is imperative that you're careful. People don't have the data to make informed decisions right now. Let me give you some options. I can't do that. Let me give you some pointers here. We no longer know what the real unemployment rate is. We no longer know what the real inflation rate is. We don't have any of this data because Donald Trump is not releasing the data. Right now, they're using as an excuse that they didn't release the employment data because of the shutdown. That's a lie. They could have released the data. It was already completed. So let's be clear here. Americans are flying blind, but even as they fly blind, people are noticing the issues because you know what? People are getting laid off and they're not even, and it's catching all of them by surprise. There is, I hope I saved it. There is this TikToker that said it quite well after she had just been laid off. I want to see if I actually liked it so that I can play it. Maybe I liked it. I'm not sure. I don't think I liked it. Apparently, I did not like it. Let me look at another one here. Did I like that one? No, I didn't like it. I should have liked it. But the layoffs are on, etc. right now. And why? Because again, people do not know what the state of the economy is, and it's happening. Angie Decadence says, Egberto, what's your take on those who have invested in index funds and ETFs in brokerage accounts? Look, first of all, I want to say I'm not a stockbroker. I am completely out of the market for financial reasons. My major investment now is just my home. This have taken, and folks don't believe how silly I am. This doing activism has taken everything else from me. But let me just say this. If you are in an ETF, that ETF is likely, and these index funds, right? If you're in this index funds, it's likely to track the market. And if we get a 50% downturn in the market, there will be a substantial, not necessarily 50%, but a substantial downturn in those index funds again, because again, that's what they're indexed, right? They may be a Standard & Poor's 500 index. There may be a Dow Jones index or one of these indexes. There are several different indexes that they have out there that people put their money in just so that they're tracking the market and not individual stocks. That way, if Microsoft craters, but Tesla takes off, you get the benefit of the market, the sum total of the market. So the index funds, yes, are the safest place really if you're going to stay in the market. In my old days, when I think the market is at a certain height, I jump out of everything and I don't ever get back in until it's on. It has been substantially lower. Like right now, we know for a fact that the market is at near the top that it can get. We think, and notice I always say we think, because there's nothing sustaining this growth. There's absolutely nothing sustaining this growth. That said, let me say this. Please remember that the market is in fact, and I'm not saying this, but honestly, the market is honestly a gambling casino. There's no correlation between the actual value of a company and the value of its stock. There is absolutely no correlation. We have companies that have no asset values, no real intrinsic, no real goodwill, that are worth orders of magnitude more than a company that have millions of dollars in physical assets. It's all a game. Thank you for being here. It's all a game, but it's a game. It's the economic system of the United States of America. And it's held up by the gods of this system until they make a mistake and it comes crashing down. It crashed down in 29. It crashed down in 80 during Reagan, 80 something. It crashed down during 2008. And all of these were, of course, caused by these geniuses that we have running our system. But it's a fraud. Remember the capitalist system, and if anybody wants to talk to me about it, if anybody wants to have an extensive call on that, I would actually make a time to talk about our economic system being a fraud. All of our country's problems, from polarization to ignorance on domestic and international issues to a complete misunderstanding of our economic and healthcare systems, are a direct result of a derelict mainstream media that too often bend over backwards to support corporate or bought politicians' wants as opposed to the people's needs for real information to make their lives better. Independent media is the only solution to inform truthfully and factually. Why? Because our loyalties are to you, the ones who fund us with small dollar contributions and subscriptions. Please consider supporting our independent media platforms by subscribing to our Egberto Off the Record newsletter at politicsdoneright.com/newsletter. Again, that is politicsdoneright.com/newsletter. It's an investment that pays incalculable dividends.